What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Sunday, everybody. I know I normally try and take Sunday off, but there has been so much on this week that I just had to put up an extra episode. I hope you don't mind me intruding on your Sunday morning or afternoon, wherever you are. Let's jump in. First up, let's again look at the ongoing negotiations between the United States and China over the future of Chinese ADRs on US exchanges. As we have seen this week, Chinese state media and government officials have expressed optimism about the two sides reaching a solution to this issue, while private analysts in the US side generally have not sounded as optimistic. As we've discussed before, the crux of the issue is that while dozens of countries permit US audit inspections, giving American officials the go-ahead to interview local accountants and scrutinize their documentation, the Chinese mainland and Hong Kong refuse, citing confidentiality laws and national security concerns. If the two sides fail to reach an agreement, more than 200 Chinese stocks are at risk of being kicked off US exchanges. Then yesterday, Saturday, China proposed reversing rules that restrict offshore trading companies' sharing of financial data, a modest compromise to try and resolve this audit dispute. The China Securities Regulatory Commission, the Ministry of Finance, the National Administration of State Secrets Protection, and the National Archives Administration jointly released the revised draft rules. Financial outlet Caixin writes that the draft rules would remove previous requirements that on-site inspections of overseas traded Chinese companies should be mainly conducted by Chinese regulators or rely on their inspection findings. Inspections by overseas regulators of Chinese companies and securities service providers, including their offshore listings, would be conducted through a cross-border supervision cooperation mechanism. Critically, the draft rules could open the door to audit inspections of US-traded Chinese companies by the United States Public Company Accounting Oversight Board. The ball is very much in the US's court now, and we will see how US regulators react to this in the coming days. But the Chinese look to have an uphill battle with this one. This is what the chair of the US Securities and Exchange Commission expressed this week. Quote, "There have been thoughtful, respectful, productive conversations, but I don't know where this is going to end up. It's up to the Chinese authorities, and it could be, frankly, a hard set of choices for them." End quote. Okay, moving on. On Friday, Chinese company Huawei Technologies appointed CFO, Chief Financial Officer, Meng Wanzhou, as a rotating chairman of the technology giant. We remember that this is the Huawei executive who returned to China just 6 months ago after almost 3 years of house arrest in Vancouver, Canada, where she was facing extradition to the United States on fraud charges. Under Huawei's rotating chairman system, 3 appointees will take turns to serve as the company's top leader for a period of 6 months. The once rapidly growing firm is now facing difficulties due to being placed on several US blacklists. Huawei revenue dropped by 28.6% last year. Huawei was placed on a trade blacklist by the Trump administration in 2019 over national security concerns. Next up, Hong Kong. In what some are calling a rebuke of the claim that Hong Kong has independent courts, free of political influence, Britain has announced that it will be withdrawing its judges from Hong Kong's highest court, the CFA, Court of Final Appeal, expressing that the presence of its judges would, quote, risk legitimizing oppression, end quote. As an ex-British colony, Hong Kong boasts the British common law system, the system of Australia, Singapore, the United States, and many others. Indeed, yours truly, as a solicitor of the High Court of New Zealand, is a lawyer of the common law system too. International investors tend to view developed common law systems as predictable and trustworthy, with strong private property protections. The British Foreign Secretary, in a statement this week, expressed, quote, "We've seen a systematic erosion of liberty and democracy in Hong Kong. Since the national security law was imposed, authorities have cracked down on free speech, the free press, and free association." End quote. In addition to general concerns regarding the further undermining of what was previously relatively robust institutions in Hong Kong, the withdrawal of British judges could have large implications for the businesses that underpin the status of Hong Kong as a financial centre. Unsurprisingly, the current administration of the Hong Kong Special Administrative Region, quote-unquote, vehemently opposes the UK move, expressing, quote, "Judicial independence in Hong Kong after the implementation of the national security law remains robust as ever. The independence of the judiciary is constitutionally guaranteed under the Basic Law." And last up, the Evergrande Housing Crisis, and we need to touch on several key developments over the last few days regarding the Chinese housing sector. If you enjoyed the content, if you're liking the episode, don't forget to hit the like button, guys. It's a huge help for a small channel like this. I always appreciate the support, so thank you. If you're watching for the first time and you're getting some value from the content, maybe consider subscribing, hit the bell notification next to subscribe. You'll have the most up-to-date analysis when these are released every day. And for those of you who want to go the extra mile, my Patreon and Buy Me a Coffee links are in the description below. Thank you everybody for all the ongoing support. On Friday, 32 firms suspended trading in Hong Kong after failing to meet the deadline for submitting earnings reports. A number of these are mainland real estate companies, including Sunic China Holdings, Shimao Group Holdings, and of course, China Evergrande. We remember that several high-profile developers announced in advance that they would not be able to meet the deadline. Despite this, however, it's not a good sign for investor confidence. Even mainland state media admitted in an article today, quote, "The suspension of trading is likely to add another layer of uncertainty to the credibility of troubled developers." End quote. The developers blamed the failure to supply the reports on time on disruptions caused by renewed COVID lockdowns. However, as we have examined over the last few weeks, another major cause could also be disagreement between accounting firms and developers regarding how to do their audits. Meanwhile, yesterday we discussed poor March data for Chinese housing sales published by consultancy China Real Estate Information Corp this week. We saw that contracted sales by the country's 100 largest property developers fell over 52% by value in March, year on year. The firm also expressed in its report of the data that property markets in third and fourth tier cities, that is poorer and smaller cities where demand is much weaker, will unlikely see even sales stabilization until the second half of 2022 or later. A research note from property think tank China Index Academy Limited, published on Friday, suggests that this has been making local governments very nervous. Since the start of the year, at least 60 cities have tweaked policies to relax controls over the housing sector, including cutting down payment requirements for certain buyers. But many of the restrictive policies of the central government remain in place, and the industry still looks like it has not yet hit rock bottom. In a research note, economists at Nomura Holdings Limited expressed to clients this week, quote, "Although Beijing has fine-tuned its property curbs, most of the strict curbs remain in place. Local governments have eased some local property curbs, including cutting minimum down payment ratios and lowering mortgage interest rates. However, property-related indicators have continued to contract." Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.